When you think of Bill Gates, you think of Microsoft. But guess what? Microsoft is not his top stock holding, and it's not even his number 2 stock holding. In fact, what's even crazier here is that his number 1 stock holding makes up more than half of his overall portfolio. So what is this mysterious number 1 stock? Let's find out. So here's a full portfolio breakdown of all of his stocks. You can see every single holding that he has. And you can see that one stock in particular makes up a majority of his portfolio, and then he has 18 other holdings that make up the rest of this portfolio. So let's walk through each of his top 6 holdings here, because I feel that these are the most significant holdings in his portfolio. And we're also going to briefly go over the other ones as well. But I want to give you my thoughts on his top 6 and kind of his overall portfolio view here as well. Starting off here at number 1, we have Berkshire Hathaway, which makes up, like I said, 53.15% of his overall portfolio. But since Berkshire is a stock that's actually made up of 48 other different stocks, in a way this isn't really one stock making up half his portfolio, it's really a collection of 48 stocks making up this portion. And this really makes his overall portfolio a lot more diversified, because now with Berkshire Hathaway, he has well over 50 holdings in his overall portfolio. And Berkshire Hathaway is really a very popular investment choice for investors that want to invest in a very diversified holding. They want to get some exposure to Buffett's portfolio, but they don't want to necessarily invest directly in the S&P 500. Maybe that's because the S&P 500 ETFs typically have management fees. Maybe that's because they feel having exposure to 500 plus companies is over diversification. Whatever the reason is, that's just how some investors think. And I think really this is a pretty safe bet, because as you can see over time, Berkshire Hathaway has well outperformed the S&P 500, which is why it is such a tempting choice for investors. Okay, so remember I said that even number 2 in his portfolio isn't Microsoft? Well, the second stock in his portfolio is actually Waste Management, which makes up around 7.56% of his portfolio. So this is another safe stock, and you're going to see this trend with the other stocks we're going to cover as well. They're going to be safe blue chip companies. And Waste Management in particular is a very safe stock and has returned investors some pretty good returns over the last few years. And as you can see, they also pay out a dividend of over 2%, which amplifies those capital appreciation gains as well. In my opinion, I agree with this holding. I think it's a very smart play. It's a very safe stock to hold in your portfolio, and it also diversifies you pretty well in your portfolio. So it's a great choice here that Bill has made to have this in his portfolio. So now we move on to number 3, and this is where Microsoft sits. Yeah, that's pretty interesting, because Bill Gates is pretty much associated with Microsoft. You think of Microsoft, think of Bill Gates. Think of Bill Gates, think of Microsoft. And it is only his number 3rd largest position, coming in at 7.41% of his overall portfolio. And I'm personally a huge fan of Microsoft, the company and the stock. I think that they've done incredible things over the last few years to propel their growth year over year. And they've been extremely good to investors here, returning them some pretty impressive gains over the last few years. Things like cloud, so their Azure platform, or even the Xbox platform, are 2 big things that I think are going to keep driving growth for Microsoft moving forward. Microsoft also pays out a dividend of around 1.67% currently, which in my opinion is incredible value, as this can be seen as a growth stock as well. And really when it comes down to it, Microsoft is a fan favorite of mine. I think a lot of you guys that are watching also love Microsoft, and rightfully so, because it's not only a growth stock, but it also provides a lot of stability, it's blue chip, and pays out a dividend. So moving down the list here, coming in at number 4 is a company that actually got hit pretty hard in 2018 and has not fully recovered yet in 2019 either, which may present a very good buying opportunity if you are thinking of investing in a stock like this. It's a popular, if not the most popular industrial stock out there, and that's Caterpillar, which makes up around 6.53% of Bill Gates' portfolio. So Caterpillar is yet another blue chip, stable stock, and currently has a dividend yield of 2.62%. So this is a company that thrives when the US economy does well, but since it's also a company that has global exposure, they also thrive when the global economy does well as well. 2018, however, was a turbulent time for the stock because economic growth concerns were kind of mounting in 2018. But I believe at current PE of around 13 or under 13 slightly, it's hard to argue why Bill Gates has exposure to this company and why a lot of investors are considering investing in Caterpillar right now. Moving down the list here, coming in at number 5 is a railway company, a Canadian railway company specifically. It goes by the name of Canadian National Railway, and this stock makes up around 5.79% of his overall portfolio. Although it's been up in the last 5 years, the stock doesn't really provide much value in my opinion as some of the other stock picks that we've gone through. and its current dividend yield of around 1.64% is not too impressive either. Now when you couple this with its current PE of almost 20, this isn't necessarily a stock that I'd be investing in and opening up a position in, but I think it's pretty safe to say that Bill Gates most likely opened up this position a long time ago, so his cost basis is most likely fairly low on this company, and he's up significantly on that position as well. That's just my guess, can't really confirm that, but if you guys do find out what his cost basis is on CNR, let me know in the comment section down below. So this may actually be the first stock so far that we've gone through that I personally would not be investing in. And I'm not really a huge fan of the high valuation here with this company, and I don't really think this company is going to be doing great things in the future either, so it's not really an investment for me. And now to close off the list here with our top 6 is another large company, a large retailer specifically, goes by the name of Walmart, and they make up 4.93% of his overall portfolio. Now we will go through the other remaining 13 positions in a second here, but let's talk about Walmart for a second. I believe that Walmart is another stock that I personally would not be investing in and have no interest in investing in at this time. Looking at the charts for Walmart, we can see over the last 5 years, they haven't really grown that much, and the stock is up around 30% when other stocks have performed much better in that time period, including Walmart's biggest threat currently, and what investors are watching closely, Amazon, of course, who is up in the same time period about 350%. The mentality around Walmart is that it's a safe, stable, blue chip company that's going to be around for a long time. But in reality, Amazon is eating up its market share year by year. And I don't think that trend is really going to change anytime soon, because a lot more people have started adopting Amazon for even simple purchases where they typically would have gone to Walmart for. So I think that the exposure that he has currently with Walmart isn't something that I personally would want to have in my personal portfolio. But again, he may have a pretty good cost basis on this, which is why he doesn't really have any intentions of selling Walmart right now. Now, the remaining 13 positions make up around 14.63% of his portfolio, with some positions making up less than 1% each. Some notable mentions, though, from these last few holdings is FedEx and UPS, which make up a combined 4.24%. And further diversify his portfolio with some exposure to delivery type stocks here. But one thing to keep in mind is that Amazon is also entering the space. I believe it's called Amazon Flex, and this could be another issue for him and his portfolio in the next 5 to 10 years. Another interesting pick here was Walgreens, which again is a retailer that will get affected, in my opinion, by Amazon. And this really raises the question, is it really a good hold for the long term? In my opinion, no, but I would love to hear what you guys think in the comment section down below. So takeaway here, what I get from looking over Bill Gates' portfolio here is that he loves to diversify himself, which is wise, but he also loves to have a lot of exposure to traditional retail type stocks. My fear is that Amazon is going to continue to affect these companies' business models moving forward. It's going to force them to change, and as a result, it's probably going to force them to take less profits moving forward, which means, of course, the stock price might not be justified at current valuations for those existing companies. Now, a lot of his stocks also do pay out dividends, which is something that you can kind of find as a theme going through his portfolio here. And if you guys are interested in dividend stocks, I did make a video recently, which you can check out on the side here, which goes over some top 5 dividend picks for 2019. And a lot of these picks not only pay out a good dividend, but they also offer some good capital appreciation for 2019 as well. But either way, thanks for watching, guys. Hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one. Peace.